Hello everyone, this is today's video analysis for September 13, 2019. Today we're taking a look at the EURUSD, the euro, versus US dollar for today's trade analysis. A couple of things to point out here on the daily time frame before we get down into smaller time frames. The blue trend line. Blue trend line is the most interesting part about this is that we have been in a downtrend for quite a long time. You connect the blue trend line to the highest high right here in the middle of the chart. You see it connected here where the blue circle is with these highs here. And what's important is the market is now challenging that blue trend line once again today. So we know that the trend line can give us an idea of resistance, potential resistance based on that trend line. Now, the trend line is not the trend. The trend line is a tool we use to represent or visually recognize the trend, but the trend really is the lower highs that you see underneath there. It has consistently over the past couple of months made lower highs, all of those being underneath that blue trend line. And so this now being a high, still lower than the previous high and underneath that blue trend line. So we know that just simply with the trend line, this area is likely to be resistance. Now let's look at a couple of other things. Fibonacci from the highest high, top of the blue trend line, to the lowest low on the chart, all the way down here just a couple of days ago, where it made the lowest low 109.26.25 in that area. Fibonacci high to low puts the 0.382 or 38% retracement level, however you want to term it. Sits right here at 1.1111, 1.1111, right here at this green shaded area, dash blue line, right at the blue trend line. So we now have two things. We have the blue trend line and we have the 0.382 Fibonacci retracement level living right here, right around the 1.1110 area at the bottom of that green zone. Now let's look at something else. Look back to the black circles on the left. All three black circles represent times when the market found support into this same green shaded area. Support, support, support. And each one of those times reversed. Sometimes longer, sometimes shorter, but all of them found support at the green zone. And so if you've been trading for any amount of time, technically you know that historical support can help you identify future potential resistance and vice versa, resistance support. But in this case, we're looking at the black circle saying support historically around this same green shaded area. So we might expect resistance. So now that's three things telling us potential resistance into the 111.05, 111.25 green shaded area. Also, the red circle shows several days, 1, 2, 3, 4, 5 days at least inside that red circle found resistance at the green zone. So not only as a historical support, it has been in this vantage point resistance. So support, resistance, Fibonacci, trend line. When it boils down to it, every day in the trade room, we talk about three trading decisions. Either we buy it, we sell it, or we don't trade it. I would say that right now, buying the euro dollar as it approaches the 111 level is going to be a difficult decision because this is a brick wall in the market. We've stacked all these indicators together to say this is a significant barrier. I guess one other piece of information to cause this to be a barrier is that even price level, the handle 1.1100, just slightly underneath that green zone, but that also becomes a psychological barrier of resistance. That even 111 level becomes that psychological barrier. So a lot of things lining up here at the green zone to say this is a pretty substantial piece of resistance, and the chance of the market pushing through it is diminished because of that. We don't have a high expectation on the day that it's going to push right through that green shaded area, trend line, Fibonacci. Now it can. Let's not forget about that. It can do that, but there's not a high expectation. We do have some news coming up 8:30 Eastern U.S. time. May prove to be strong enough to drive it through there. So we'll keep an eye on that. So the only reason we expect it to go higher, let's zoom in one more time, is that it gets above here. So we're not buying unless it does that or dips down into support, which closest support, by the way, is the purple zone, 1.1075.55. You can see that underneath the red circle. So that's your support. If you're going to buy it, you prefer to buy it there. You don't buy it now. Potential, looking for resistance and reversal to go back down. That's a possibility, especially if that news at 8:30 a.m. Eastern U.S. time is positive for the U.S. We could see this take a turn lower, and only looking for a buy scenario if it breaks through that green zone. 4-hour time frame, not really going to change it. It really, though, shows the pretty wild day we had for the euro dollar yesterday. Look at yesterday, that significant bump down to the blue zone, significant rally back to the purple zone. Now here we are at the green zone. So again, pretty wild day yesterday. I pretty much stayed away from all of that right there yesterday. So looking for some new opportunities. I think the green zone is the opportunity we're looking for. Either it breaks above here to go up, or it reverses from here to go back down, and we'll look for price action clues that give us an idea that that's going to happen, and we'll keep an eye on the news coming up at 8:30, and we'll talk about it in the trade room later today for the euro dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.